Ahoy there, trader. It's Phil. Today we find out who will be the next US president. Is it going to be Trump? Is it going to be Harris? Historically, the markets tend to have a bearish bias leading up to the election, followed by a bullish trend post-election. As a non-US resident, I don't really mind either way who's getting in. What I remain focused on are the market movements, and we've got some interesting insights today. Now then, over the last few days, we have had some amazing trading opportunities despite the sideways, slightly bearish bias that we've seen in the markets. And there is a lot of data to support these election cycles. Again, I've got a nice visual representation here with the last 25 or so years of data. Again, we can load 100 years of data. It doesn't make any difference to the outcome that you see here. But basically, 30 days prior to the election, the first Tuesday in November, basically we see this bearish bias in the markets. And then post-election, again, there is a bullish bias over the following 30 days, but there's also a bullish bias over the next 3 to 6 months. Let's just take a quick look at the last couple of election cycles on the actual charts. So in 2020, we can see there's actually, again, in that month prior to the start of November, we see a very clear bearish bias, and then post-election, we see 3-6 months of bullish, quite strongly bullish movements. Again, the same thing can be seen in the 2016 cycle. Again, we get this bearish bias, and then pre-election and then post-election, we have a very strong bullish bias. And then when we go back to 2012, the same thing. We actually had almost 3 months of negative or bearish movements leading up to the election, and then post-election we have this very strong bullish reaction. And essentially what it comes down to is the pre-election movements versus the post-election movements. We have this certainty versus uncertainty situation. Again, on the run, who's going to get in to be the next president? What policies are going to be in play, etc., etc. So we have this uncertainty around the events, and then post-election we have this certainty situation. Well, we know who's in, we know what the policies are going to be, we know the potential outcome over the next 4 years, and the markets like that. So that is essentially, in very broad strokes, what is going on and what typically happens around such events. Again, there's a lot of data from a variety of sources to support this. On a personal level, I went flat last Friday. I closed out I had several bear swings, again with this movement or type of movement in mind, and I look to resume trading on Wednesday, and I will be anticipating being mostly bullish right through to the end of the year. If you like what you've heard today and want to learn about a proven system for generating daily and weekly income from the markets using SPX options, click the link next to this video, and I will see you over on a free training which I've recently held. I'll see you over there.